When we're talking about incomes being taxed, we're talking about people who have money coming in at a regular frequency, and we are generally talking about a rate that's taxing that income that is somewhat proportional to what the individual is making. When we take away proportional level based on income, we start to really get into groups of people like retirees, college students, hourly workers, and single parents. A billionaire and a family barely surviving inflation are not carrying the same tax burden just because both stop at the same grocery store. Should taxes primarily come from income and wealth or from living, buying, and surviving? And when politicians say they're cutting taxes, who actually ends up paying less? And what services actually get cut? Shall the Missouri Constitution be amended to phase out the individual income tax based on revenue growth, reduce personal property and other local taxes when local revenues increase, modify the sales and use tax to eliminate income tax and reduce local taxes, and protect local funding for public schools and other purposes? Missouri is proposing a constitutional amendment to phase out the state income tax and shift more taxation toward sales tax.
Money, 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 all I see. Money, 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 all on me. Money, 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 stack it tall. Want it all. Money, money, money in the bank. Money, 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 what you think?
Hello, and welcome to Coffee and Calculated Curiosity. I'm your host, Cassie, and this is week 20. 20 weeks into my 52 Bills series. Let's get into it. Everyone says they are middle class, but taxes don't work on identity. They work on math. They work on math. They work on your take home math, to be specific, which raises a calculated question on my part. If taxes stop being attached to income, who ends up paying more while living everyday life? This is the Missouri House Joint Resolution, numbers 173 and 174.
Night and day. Night and day.
This proposal would gradually eliminate Missouri's individual income tax. To compensate for lost revenue, lawmakers would allow to expand sales taxes onto additional goods and services. Pardon me. The amendment also says public school funding cannot be reduced, which creates another math problem. If the state still has major obligations, but removes one of its biggest revenue sources for said obligation, where does that money come from? Where does that money come from? We have to have a serious conversation about what taxes pay for, what taxes should pay for, and what taxes do pay for from state and federal income tax. Let's read the bill. Joint resolution submitting this language already. Submitting to the qualified voters of Missouri an amendment repealing sections 4D and 26 of Article 10 of the Constitution of Missouri and adopting two new sections in lieu thereof relating to taxation. Be it resolved by the House of Representatives, the Senate concurring therein, that at the next general election to be held in the state of Missouri on Tuesday next following the first Monday in November 2026, or at a special election to be called by the governor for that purpose, there is hereby submitted to the qualified voters of this state for adoption or rejection the following amendment to Article 10 of the Constitution of the state of Missouri. In enacting any law imposing a tax on or measured by income, the General Assembly may define income by reference to provisions of the laws of the United States as they may be or become effective at any time or from time to time, whether retrospective or prospective in their operation. The General Assembly shall in any such law set the rate or rates of such tax. Section 26. In order to prohibit an increase in the tax burden of the citizens of Missouri, state and local sales and use taxes, or any similar transaction-based tax shall not be expanded to impose taxes on any service or transaction that was not subject to sales, use, or similar transaction-based tax on January 1st, 2015. 2. Notwithstanding any provision of this Constitution to the contrary, including subsection 1 of this section, for the purpose of reducing and eliminating the state income tax and reducing local tax rates, state and local sales and use taxes, or any similar transaction-based tax, may be exempted by legislation to impose taxes on transactions involving any goods and services for the purpose of reducing and eliminating the state individual income tax and reducing local tax rates. With respect to legislation enacted by the General Assembly, means that legislation expressly states that the General Assembly's finding that such legislation will directly lead to the reduction and elimination of the state individual income tax that imposes a sales or use tax shall, in the manner provided by law enacted by the General Assembly, make a one-time adjustment to one or more of the following rates of tax imposed by the political subdivision to reduce the amount of revenue generated thereby in an amount that is substantially equal to 97% of the additional revenue produced by an expansion of the sales and use tax base authorized by this section. The sales and use tax rate, the levy imposed on property in Class 2, the levy imposed on property in subclass 1 of Class 1, the levy imposed on all Class 1 property if such political subdivision imposes a single rate of levy on all such property, or the rate of any tax imposed on earnings. Notwithstanding the provisions of subdivision 1 of this subsection to the contrary, no political subdivision shall adjust its local tax rates in a manner that results in any reduction of funding to any public schools within or serving such political subdivision. Notwithstanding any provision of this Constitution to the contrary, beginning 12 months from the effective date for legislation in which the General Assembly expands the sales and use tax base pursuant to subsection 2 of this section, each sales and use tax rate imposed directly by this Constitution, with the exception of the rate imposed under Article 14 of this Constitution, shall in a manner provided by law enacted by the General Assembly be adjusted in order to reduce the amount of tax in an amount substantially equal to the amount of tax produced by any sales and use tax base expansion authorized by this section. The state auditor shall be responsible for calculating the reduced rates that will go into effect as provided in this subsection. Section B, pursuant to Chapter 116 and other applicable constitutional provisions and laws of the state following the General Assembly, to adopt ballot language for the submission of this joint resolution to the voters of the state. The official summary statement of this resolution shall be as follows. Shall the Missouri Constitution be amended to phase out the individual income tax based on revenue growth, reduce personal property and other local taxes when local revenues increase, modify the sales and use tax to eliminate income tax and reduce local taxes, and protect local funding for public schools and other purposes. That's going to be the question on the ballot for Missouri voters in November of this year. Let's talk about what that actually means. This proposal does not remove the need for revenue. It changes where the revenue comes from. Before this amendment, Missouri mostly taxed goods and had the income tax. Now, this proposal opens the door to expanding taxes not only onto goods, but also onto services in order to replace income tax revenue. America increasingly has been moving to services as revenue streams. The bill says if expanded sales taxes generate new local revenue, local governments are supposed to reduce other taxes by about 97% of that new amount. But the major question underneath this proposal is what happens if those new revenues do not grow fast enough? If people spend less money, if a recession hits, if local collections slow down, does that even remove the income tax? Does that keep everybody being stagnant? The income tax phase out is still built into the structure of the amendment, which means Missouri could face pressure to balance funding using other taxes, fees, and services to reduce income tax over time. Let's look at two families of four. One household makes $350,000 a year. The other makes $80,000 a year. Both families buy groceries. pay utilities, buy gasoline, carry insurance, and need transportation. But these households do not experience taxation in the same way. Let's keep the same average costs. They live in the same city, they shop at the same places when they can, their kids go to the same school, everybody's in public school. Let's do that one. And then under the current system of income tax, what is the average cost of groceries? And this is where you're seeing this $9,600 under the current system with an income tax. Under a proposed system of no income tax and higher sales tax, we can see our grocery costs are probably going up because we can add some taxes to those to make a few more dollars. So that way, the roads and the parking lots that are going to those grocery stores can still work. The buses that are going to those grocery stores can still arrive. Gasoline, same thing. Maybe it was just taxed lightly. It's going to have a higher tax with a sales tax on it post getting rid of income tax. Housing taxes might remain the same since these are not subject to sales tax. However, the repairs and services, maintenance, and fees would now be subject to a sales and use tax. So those fees we could see go up. Vehicle payments, currently not taxed, but if there are taxes added to loan fees, maintenance fees, and services fees, that increases the amount that you're paying for your car. And utilities, things like your electric and your water, your trash, your internet bill, etc. Those aren't taxed directly, but we can see fees being added for services and things. Now, this is where the real breakdown gets into the nitty gritty. So I need you to look at the tiny numbers at the bottom. When there is a state income tax estimated in this case, because we're talking about Missouri, and we see a higher income tax on the family that has a higher income. So, in comparison, the amount of income that's coming out for each family is 4.7%. For the state income taxes, they're not in a different bracket. So we've just added in an additional $4,206 that in this scenario would need to be paid by each family. But we can already see that in a setup where the families have very similar expenses, a sales tax hits a lot harder when you have less because it builds up very quickly on goods and things that you need to have, not just on things that you would like to have. In this scenario, the sales tax is actually more expensive than keeping an income tax at a percentage that is maybe payable for the family in this scenario. A wealthier household can save, invest, delay purchases, or absorb higher prices more easily. Lower and moderate income households spend a much larger percentage of their income surviving. So if we start to get down into even lower incomes that families have across the United States of America, we would be seeing even greater differences. So when taxation shifts towards consumption, the burden shifts toward daily life. Retirees might have money coming in monthly from Social Security. They might have a little bit of money coming in monthly from a 401k or possibly a pension if they're lucky enough to have one of those. But it's smaller than usual. It's a much smaller rate of dollars coming in the door. A college student, same thing. Maybe they have a part time job working on campus so they can have a lower rate to pay back to that school whenever they're done being there. A single parent, often a single income household, all of the children's expenses, all of their own expenses, and only one income that's helping to support that. What I want to highlight for you and for us, and as a group of people, is that the taxes on things that you buy at the grocery store or that you pay at the gas pump aren't then subsidized by the fact that you only have a single income or that you are a retiree or that you are a college student. Sometimes there are some discounts for veterans. Sometimes there are some discounts for seniors. There's occasionally discounts for college students. There's really not discounts for single parents. The tax rate stays the same based off of whatever state you live in. And we find much higher tax rates for sales tax in states that don't have income tax. because someone still has to pay for the government services to be there, for the roads to be there, for the ambulance to show up. We need a list of what are the things that our state income taxes pay for. We can start to think through, if we lower the amount that's paying for those, what are we giving up? In modern America, almost everyone except for billionaires call themselves middle class. It's just that the tax rates don't operate on your ego identity. They operate on the income that is coming in, the assets that you have, the spending that you do, and the ownership that you compose. An $80,000 household and a $300,000 household may both feel middle class compared to a billionaire, compared to someone who's unhoused, but they are not impacted equally by sales taxes. People often avoid terms like working class or lower class because those labels carry shame and hierarchy. Historically, economic systems have always been tied to status and social ranking. Hiding economic differences makes it harder to understand how policy impacts people. So in America, we don't ever talk about having a caste system, but that is what ruling class, upper class, middle class, lower class, working class, underclass, the amount going from your paycheck to buy that apple from each individual person is nowhere near the same. Okay, so we have supporters, we have critics. Let's break that down. Supporters say people keep more of their paycheck if you don't have an income tax. You get to keep more of it when you get it. Critics to that argument would be saying the tax burden shifts toward everyday spending, which you can't really decide what you're going to do on. If you lose your job, you still have to buy groceries. You're still spending if you lose your job. You're not having to pay out of an income tax if you lose your job. Supporters might also say Missouri can be more competitive now. More people might want to move there, like they've been moving to states like Texas and Florida. And this gives families an opportunity to maybe try to afford living in the state because they don't have an income tax due. The critics to that exact argument would say sales taxes hit lower and middle income households much harder than they do if they just had an income tax. Taxing, another support argument, taxing spending is fairer than taxing work. We shouldn't tax labor. We should tax what you choose to spend the labor wages on. And we want to tax those at a much higher rate. So, alcohol is taxed higher, cigarettes are taxed higher, having an Uber might be taxed higher, gasoline can be taxed higher. If you choose to live in a specific part of the city, that should be taxed higher, but we're not taxing your labor. And the critics, again, it's something similar as you can see as a narrative throughout this piece. Survival spending is not optional. If someone is saying, well, if I buy another home or if I buy a yacht or if I buy a new grill, then okay, fine, my taxes can be higher. It's going to be fine. I'm going to buy these new shoes. My taxes can be higher. Survival spending is not buying a new grill or a new couch. It's not getting that new car. Survival spending is the everyday stuff, toilet paper and prescriptions and eggs. Supporters might say not having an income tax allows for the state to have less government around because it's a simpler tax structure. We don't have to worry as much about like what's happening behind the scenes. With inflation going up, though, critics might bring up the point that state revenue becomes less stable during downturns. It feels simpler at first, but it can become very unstable very quickly. Because what happens if people just stop buying things? Supporters like to argue that this would attract businesses and wealthy residents to come live in the state so they can get out of paying an income tax. And critics are going to use the same thing that we saw earlier, and then we can see in the visuals wealthier households benefit more overall if there aren't income taxes and it's just based on sales taxes or property taxes, levy taxes. A lot of supporters are going to argue that the government should shrink instead of taxing income. We don't need as much government. The IRS, we don't want them here. Let's have less government overall. And the critics to that would say public services still require funding. Think about the public services that you have in your local areas: ambulances, libraries, public roads, public parks, the courthouse. You have the governor of the state and the mayor of the city, bridges, ferries, like we talked about last week. Just some very simple things that the state government does. The bill talks about local taxes could be reduced in some areas, but we also need to hold in the same breath that local governments are still going to face funding pressure. So instead of getting funding from local residents for local issues, they're going to need to go ask for state grants, federal grants, get money from a different state altogether, be in debt for a bit. They're going to have to figure out a way to balance the checkbook. And it actually might make more government work because it's going to be needing to come from outside of local resources. The message here is very, very strong because it says we're giving voters the chance to vote for their own tax cut. These voters are qualified. These voters can read what's on the page, and these voters get to say, I voted for a tax cut. I voted for my own tax cut. What we don't get to see is how often those are the same voters who understand the costs and the fees that appear for sales tax and services taxes. And if they see those over time or not, or if they only see that $1 amount that comes out around April 15th every year. I think one of the arguments that's been defunct a lot in anything that we look at is where someone says it's fair because everyone pays the same sales tax rate. And this is where we get into equal and equitable are two very different things. Equal rates do not mean equal impact because there's not equitable dollars that are going around in these situations. This is where tax policy becomes less about slogans and more about systems. Supporters are seeing this as freedom from taxation. Critics are seeing this as shifting the burden onto daily life and consumption. Both sides are arguing about fairness. They just define fairness differently. Another core question underneath the proposal is, should society primarily be funded by taxing income or by taxing living, buying, and surviving? Well, it makes sense. There's going to be taxes somewhere. We're not yet in a place of society where billionaires are just donating their dollars and making sure everybody has a universal basic income and the ability to live. There's going to be taxes somewhere. Where should those be? What should those be on? Who should be paying them? Supporters are saying in the fairness part, everyone should contribute. And critics are not disagreeing that everyone should contribute. They are saying not everyone can absorb the same cost equally. And when we say everyone should contribute, we mean proportionally to what the share is that they have. The differences are a wealthy household might spend 20 to 40% of their income on living expenses, but a lower income household is spending 90 to 100% of their income on living expenses. They are surviving, they're not choosing to consume. When taxation shifts towards consumption, the percentage burden effectively raises on people with the least flexibility. And that matters for Missouri. Missouri's median income, median does not mean the average. Billionaires distort averages upwards, and unhoused people who are unemployed would distort averages downward. Average income can sound much wealthier than what the normal households actually experience. And that's why we look at median household income for this specific conversation. Incomes are around 98K for a family of four. So we're not too far off from the scenario that is in the screen. We didn't even add childcare. Everybody thinks that they're middle class, but tax systems do not follow your ego identities. The bottom line here, it's about how much room do they have to survive under rising costs and whose costs should rise the most. Every tax system answers the same question: who should carry the weight of funding society? And if it's not answering that well in your community, that's where you need to get involved with local leaders. This has been Coffee and Calculated Curiosity. I'm your host, Cassie. Thank you for taking a sip with me. I'll see you in the channel.